AIM-listed Asiamet Resources is an emerging copper producer focused in on the development of a portfolio of assets around copper, copper gold and polymetallic deposits in Indonesia. Its executive chairman is Tony Manini, and he joins us now, having just managed to see the release of the updated feasibility study for the BKM copper project. Tony, welcome.
Thank you for having me, Jerry.
It's good to talk to you at this time, not just because of that news you've had recently, but also there's a lot of chat around the markets at the moment about copper, which we've got to get onto in a few moments' time. But let's talk about Asiamet first of all. Yep. Exciting times. You've come through, I know, a few years of some investor question marks, but we're now in this position. How do you feel now, having got this feasibility study out in the open?
Well, feeling extremely confident. I mean, it's the updated feasibility that we've put out just recently. It's a very robust feasibility study, very detailed, high quality work. The financials look very strong. So, with the commodities, as you said, copper is certainly something that everybody's chasing. So we've got one of the few development ready, shovel ready projects, just moving into project financing stage. So, coupled with a big growth pipeline of copper that sits behind that. So, it's part of a longer term strategy, and we're really well positioned.
How difficult is it to raise money at the moment? Small companies, they're focused on relatively few projects, and there's a lot of money needed to set these things up.
Yeah, look, it's quite difficult, I think, across the market. Irrespective of whether it's AIM or the TSXV or even the ASX. I mean, there's a lot of, hype around some of the battery minerals, but in the copper space, it's actually quite difficult. And gold, I think, even more difficult at the moment. We are fortunate at Asiamet that we have a large strategic shareholder who's very supportive of the long-term strategy that we're deploying in the company. So, we've got, that support to continue to develop our assets through this point in the cycle. But as we know, markets go up and down. But the fundamentals are really the key driver for us. The outlook for copper and where we are with the development of our assets.
I want to talk about the share price in a moment, but let's talk more about this large supportive shareholder. What's the long-term relationship with that shareholder, and where's that relationship likely to go? Yeah,
so the largest shareholder is a group which goes by the name of Delta Dunia, or DOID is their code. They're an Indonesian, the second largest mining contractor in Indonesia. Indonesia is a big mining country, as you would know. They are looking, they're continuing to grow their business and they're looking to establish, predominantly their business has historically been in the coal space, and they're looking to diversify now into the minerals and metals space and transition over time. So they're backing us as a platform to actually build out that business, which is, in the future-facing metals, particularly as it relates to the energy transition. So, the relationship with them, goes back quite a way. I've worked together with some of the major shareholders of that company on other mining projects previously, which have been very successful, which we've developed, taken through to production, produced successfully, and on-sold those assets. So, they're people that I know well. They're very supportive of the strategy, and it's a long-term plan to build a much bigger business.
From a global point of view, we talk a lot about the demand coming through from China, but I guess Indonesia itself has a big demand for copper, doesn't it? So presumably, ultimately, when you start producing, it will go locally.
Yeah, so I guess a key differentiator for our project, particularly the first project that we're getting underway at BKM, it produces copper cathodes, so copper metal. As you said, Indonesia's a population of 270, 280 million, and very rapidly growing middle class. So there's a big consumer market and there's this very substantial demand for copper. So, I can't see the volumes of copper that we're producing moving outside of Indonesia at all. It will most likely be sold internally within country, but it's as I said, we actually capture all the value chain, whereas a concentrate, you've got to sell a concentrate. And in Indonesia, exporting concentrate is actually not allowed. you've got to actually process it in country. So having a project which produces metal is a major advantage, for us in terms of selling into that local market or exporting. We can export copper cathode because it's finished product.
Yeah. Of course, there's a lot of retail investors that follow this particular space that Asiamet's in and will know Asiamet very well over the last few years. It has been difficult, hasn't it? I mean, you got through that. Here we are now regrouping with the future. Well, how would you sum up what's happened over the last 2 or 3 years? Because there's been a lot of elements that have come in from different angles that were black swan events to a degree, which have hit us all.
Yeah. Look, we finished the feasibility study, initial feasibility study in 2019 and second half of 19. Clearly, we ran into COVID in 2020. At that time, we did a deal with a group that was going to invest in the company. We spent the best part of 2020 sort of on that, and then they subsequently didn't come through in the end. So that was a major disappointment for us. We've had to regroup from that, and subsequently, we came into 2021, 22, and then we've sort of all of a sudden inflation has taken off. So the cost of everything, all your input costs into both the capital piece of the mine in terms of the mine build, whether it's steel or any other components, and also the operating costs, so fuel and everything else. So we've had to we then had to do a refresh on the feasibility study after essentially 2.5, 3 years. But we've had to sort of reshape that whole project around the macro environment for cost inflation. So Darren, the CEO, has done a great job together with the team on reshaping the project, smaller footprint, almost a similar scale of production, and come through with a very robust, outcome in terms of both the physicals and the financials. So we now move into, straight into the project financing.
It's interesting, isn't it? Because you get a storm, trees fall down. Those the trees that are left are those that survive and go on to become bigger trees. So I guess you've got your eyes on becoming a bigger company from where you are, because you've got yourself, as you said, in a good position.
Yeah. Look, I mean, our background and history is building projects, building and operating mines. So that's what we've been very focused on from day one. As we said earlier on, the market goes up and down a bit, but we've got a strategy that we're working to. Clearly, it becomes challenging when the market support falls away, but we've got to continue to do what we set out to do. We've got the assets. Fundamentally, you have the assets, and the assets are very, very good assets. They don't, they're going up in value despite what the market's saying at the moment. So,
well, let's pick up on that point about the market and bring in the share price. This goes back to the very back end of 2021, and of course it picks up on all the negativity that we had last year and the difficulties that small caps are having, as we alluded to at the start, especially those raising money. What do you say to shareholders at the current share price and what's happened, where you are, how you've regrouped, the leadership you've got there? I mean, you're a 3%, something like around about 90. I think the board owns about 11% of the stock. And as you say, there's one really big shareholder. So there's a lot of very concentrated interest in where the share price goes. So what are you saying? What are you believing where we are at the moment and what it prices in? What it doesn't price in?
Yeah, well, I mean, I think, I'm not going to run through all the metrics today, but if you look at just the resources that we've got in the ground, and you do a conventional, cents per pound of copper in the ground, and you run the numbers on the resources we've got, and you do the same with gold and the other resources that we have, the polymetallic resources, you're going to come up with a much, much bigger number than the current market cap of the company. So that's just one simple metric. We have just completed a feasibility study on one project, which has got an NPV of circa 162 million. If you think copper's going to be stronger for longer, then it's substantially higher than that. It moves up, into the 200 to 300 range. So we're sitting at a market cap of 25 million. So irrespective of which metric you look at, there's a disconnect between the valuation that we're at today with real assets, significantly de-risked with a feasibility study, moving into project financing, shovel ready. like anyone will tell you, there's very, very few shovel-ready assets.
Yeah,
anyway.
long list of tick boxes.
Yep.
Before we get into the price of copper, I just want to talk about the other projects
Yep.
and talk about where else you got interested. As I said at the top, polymetallic, you mentioned the copper, gold, and so forth.
Yep.
What else is becoming a priority?
Yeah, so, the project financing for BKM is our
Number one.
core focus over the next 6 to 9 months. So, as I said, finished the feasibility study. Now we're focused on that piece of it. We do have another large copper asset called Butong, and getting value for that is important to us as well as we sort of move through this next phase. But also, coming back to BKM for a minute, BKM this is stage one. This is a starter project. What we've always been focused on is getting into production, getting cash flow, and then growing that business. And we've got a plan, over a period of time to do a second stage and a third stage once you establish the infrastructure from stage one, and eventually take the production out of that BKM area up to circa 35 to 40,000 tonnes of copper equivalent over the next few years. So substantial growth within that, your capacity to double production at BKM alone. And then you've got this large resource that sits behind it, which is a much larger capital project and a longer term. And we may look to partner on that or potentially sell part or all of that asset to fund the ongoing growth of the business. So that's really, our core focus. But right now, it's project financing for BKM.
Yeah. Got to talk about the price of copper. We said before we went into the interview that you were happy talking about this. This is high-grade copper. There's a lot of chat about this at the moment. But on the negative side, I have to say that China is not proving up to be the robust economy that we thought it was going to be in 2023. I think this soaks up some of the negativity we've seen. Let's take it into a more recent focus, and you can see the drop that we've had. What's your view on copper? I mean, it's going to be a while before you start producing, but you are looking to enter this market. You talk about the price that it's possibly worth. If I shrink this down, that red dotted line was, I think, where Citigroup was looking at 7,500, whatever it is, double where we are. That's a third-party market view. What's your view as someone that's been in this market as long as you have?
Yeah, so I've been in this market for 35 years, so and I'm a supply side person, so I've got a fundamental view, and the business of Asiamet is predicated on that fundamental view. Going back to 2015, as a supply side person, I could see what was going to play out over time. They call it Dr. Copper because it's a bellwether of global economic growth. So I actually take right now, people are sort of getting a little, I guess, fixated on a short term. The price has come off a bit in the short term, but it's actually, if you look at the long term, even the price today is still a very strong price. I think one of the key things, Jeremy, is that the market is extremely tight in copper, and something extraordinary is going to have to happen, because if you look at that, you've got that traditional tie to global economic growth. Yes, that's coming off a bit. And your point about China, yes, that's coming off a bit. China consumes 50% of the world's copper. But we have another sort of layer that's a bit detached from the global economy, and that's the energy transition. And, you can see all the targets that have been set. You can see the wall of money going towards the energy transition. And that's fundamentally, on a big market, it's a 23 million tonne market. It actually layers on about another 30 to 35% of demand out to 2030. So that's the demand side. On the supply side, there's been very few new discoveries made over the past 10, 15 years. There's been very little money going into copper exploration. The big companies have been giving money back to shareholders. The average grade of production has come down from somewhere around 2000 at about 1.4% to today 0.54%. So if you just think about that, you need to build 3 times the bigger infrastructure to produce the same amount of metal. And that's why we're seeing the big projects costing $6 billion, $7 billion, $10 billion. And the capital hasn't been available to do that. So those projects, there's one or two that have been built. Ivanhoe's built one in the Congo, and then there's one or two being built in South America. But fundamentally, if the numbers, just don't match up, so, we see a structural deficit, a long-term structural deficit coming. And if you take into consideration, it takes 14 years on average now from discovery to first production, and there's lots of different layers in terms of impediments around permitting and the environmental and social aspects of building a new mine. So that's why you're getting forecasters sort of talking $5, $6, $7 copper because of the squeeze we're seeing in the market. And look, since our feasibility study's gone out, the amount of inbound interest that we've had coming in from all different angles, I think particularly China, tells you that the market is extremely tight and people are scrambling to get exposure to copper right now.
You're going to be taken over?
Well, if we stay at these prices, I'd say it's almost a certainty, but it's our job is to get the price up from where it is today. As I said, we've got a strategic shareholder who's got 24% of the company. Ourselves, we've got sort of 11.5%. We know it's worth a hell of a lot more than it is today. And we are in to build a business and take this up to something that's worth hundreds of millions, if not billions. So, we're not going to sort of succumb to a lowball bid today. We've already had some lowball bids in the past 12 months. So, it's just not something we're going to entertain. No.
Let's just round it off and go back to basics in Asiamet, where you go, what happens next, what we should be watching out for to check you're on target.
Yeah, so I think the key activities, as I said earlier on, over the next 6 to 9 months is the project financing. And there's multiple sort of layers to that. So there's a senior piece, which is with the banks. We'll appoint a lead bank pretty shortly. There's a number of other banks sort of that we're already sort of engaging with on the syndication. They've got site visits coming up. The independent technical experts sort of working through a review of the feasibility and visiting site in early July along with the banks. So that's that one piece. Then you got the off-takers. We've got a lot of interest from off-takers. I mean, cathode is in premiums. You get $100 premium for cathode over concentrate in the Asian market. So that's a tight market. So we've got a lot of interest from off-takers. So there'll be off-take with off-take finance, then equipment finance, construction finance. So we'll put together that, package. The intention, we are not going to be able to, we've got a $235 million CapEx project. Assume that we do 50% of that in debt. There's about 100 to 120 million of equity. We're not going to raise the equity in a market where our valuation is 25 million. So I'm very confident, given what we're seeing and the tightness in the market and the interest in what we've got, that we can solve for that equity without coming to the market. So that's sort of where our focus is going to be. We've appointed advisors. I think we announced that yesterday or the day before, really to assist us with all of that process. And that brings in sort of M&A activity as well around this project and other projects as well.
Thanks indeed for joining us. That's Tony Manini, the Executive Chairman of Asiamet Resources.